Welcome back to another lesson on Shine On Me. Today we'll be talking about an introduction to investing. First, what is investing? Investing means that you're using your money to buy something that you expect will bring you more money in the future. It's about making your money work for you instead of just keeping it in a savings account. There are many examples such as buying company stocks or shares, buying bonds, purchasing real estate, starting a small business, or investing in education or skills. So why do people even invest? One reason people invest is because it grows wealth. Money can increase in value over time. It can also help you reach goals in the future, such as buying a house, paying for college, or retiring comfortably. It also beats inflation because prices rise every year and investing helps your money keep up. Lastly, you can earn a passive income from investing. Some investments provide regular income like dividends or rent. And now that we know why people invest, what is the difference between investing and just saving your money in a savings account like we've talked about? There are many aspects, first talking about the purpose of the two different scenarios. First, for saving, the purpose is to keep money and it's usually for short-term goals. On the other hand, investing helps you grow money for long-term goals, which is the essential purpose. Also, talking about the risk of both saving and investing, saving has very low risk because it's usually safe in a bank account, while investing has higher risk depending on the market. For return, the return for saving is very small and it's just the interest, while investing can have higher return such as profit, dividends, or growth. Now for access, savings are definitely easier to withdraw at any time, while using investments you might need to wait or have to go through the selling of your assets. Moving on, there are also common types of investments. First, we have stocks or shares, bonds, and real estate. Starting with stocks, we know that this means owning a part of a company and earning from its growth. An example would be buying Apple or Samsung stocks. Another type of investments are bonds. For bonds, you lend money to a government or company and you earn interest from this. An example would be government saving bonds. Moving on, another investment is real estate, which is when you buy property to rent or sell later. And examples are apartment or areas of land. We have two more types of investment, which is first mutual funds or ETFs, and this is groups of investments managed by professionals. Examples are index fund and S&P 500 ETF. We also have investment in education and skills. This is actually investing in yourself for your future income. And now that we know the types, let's talk about how investing works. How it works is you invest money into an asset. Over time, that asset may increase in value or give you income. You can sell it later for a profit or reinvest it in order to keep growing more and more. An example would be $1 million you invested in a company, and if that company grew 10% in a year, it becomes $1,100,000 after 1 year. So now let's go over the risk and reward principle. Every good thing will have its drawbacks. For investments, higher risk usually means that it has higher potential return, while lower risk means that you'll have lower potential return. Smart investors try to balance both by diversifying and spreading their money across many types of investment, high and low risk and return. So some smart tips for beginners will be first that you should try to probably start pretty small. Even 10,000 or 50,000 won can begin your investing journey. Also, learn before you invest. Read, watch videos, and ask questions about people who are educated about investing. Also, try to think long term. Focus on growth over time, not just the quick wins. It is important to see this as an overall journey. Next, you should also avoid emotional decisions. Don't panic when the markets move, and make educated and rational financial decisions. Lastly, you should definitely try to diversify. Don't put all your money into one place and rather invest into multiple types of investments. Now that we are slowly wrapping up this lesson, let's cover the key takeaways that we've learned from this introduction to investing. First, we learned that investing helps your money grow through things like ownership, lending, or skill building. We also learned about the risk that every investment has, but at the same time, it has potential reward. Also, the earlier you start, the more time your money has to grow. Lastly, or almost most importantly, knowledge and patience are the most powerful tools in investing. Thank you for watching another lesson on Shine On Me, and be sure to look forward to more educational videos.